Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hope all of you have had a very beautiful weekend so far. Now, before we get into the video, guys, I want to address something that happened today that is probably front and center on a lot of our minds. And that is undoubtedly the second assassination attempt that happened on former President Trump's life over the course of the afternoon today at his own golf course in the state of Florida on this Sunday afternoon. Now, I usually don't get very political on the channel at all, guys, except for when it kind of transcends everything, right? And this is once again one of those events. Now, we're not going to get too deep into it, but what I did want to say, guys, is we are definitely living right now in a climate of excessive division and excessive animosity towards one another, depending on our ideological or political beliefs. And this needs to come to an end, guys. In my lifetime so far, and I'm still fairly young in my mid-30s, but I have never really seen an environment like today where there is so much division and so much hatred amongst one another. So I think one of the steps that we can take amongst each other, guys, is to remind each other how much we care for one another and how much you love the people that are close around you. So if I have some concrete steps for all of us to take, myself included, guys, is tonight, call somebody up, one of your family members, one of your friends, one of your close relatives, and tell them how much they mean to you in your life. I think if we each start implementing little steps like this in our daily life activities, it's going to bring back a lot of the love that the world needs right now, rather than sowing division, sowing hatred, and sowing animosity amongst each other, right? If we are constantly reminded of our love from one another, it's very hard to kind of look the other way, right? So I know it might sound like a little bit of a shallow message, or, I might sound that it's not going to do so much, guys, but trust me, these things do absolutely matter. And it's very, very noteworthy for us to all start taking these steps together, right? So an extremely unfortunate event, guys. And once again, my heart and prayer goes out to all of my American brothers and sisters who have to constantly live through these very, very vicarious times right now, right? Nobody should have to be going through this, especially not in our modern day world, right? So that is pretty much the fact of the matter for that. My apologies once again. Now, in terms of the video today, of course, well, what we're going to do today is, number one, we're going to go over the expectations for the week, because we know this week is going to be very, very volatile, because it's the week in which we're starting to get the first rate cuts by the Federal Reserve. So it's going to be an extremely volatile week. So my goal is to kind of set the expectation and set the tone for the week. Thereafter, we're going to go over a few of these strategy rules in terms of the options plays that I'm going to give you guys on the channel. So that'll be step number 2. And step number 3, of course, is going to be going over the top 5 options plays for the upcoming week. So a lot to cover in today's video, guys. Let's jump right into the action. So in terms of how we are set up on a technical standpoint, guys, well, we know that the bulls have really established their control back in the last week of trading and have put in a very nice engulfing move on the weekly. We are now very, very far away from the lows that we had just a few weeks ago, and there is a lot of space that has been created. However, just keep in mind, it's going to be an extremely volatile week. So even though it looks like the bulls are putting in somewhat of a full recovery, we can very easily start revisiting these lows in the event the data is not well received. So my tone this week, guys, is definitely going to be one of caution. For all the options plays that we're going to be writing in these markets, we have to give ourselves a very wide margin of safety and have to be focusing on the highest quality companies out there right now. Now, moving in, QQQ is exactly the same. We know the bulls have put in a great deal of a recovery, but we also know how quickly one bad day of data can influence the markets to the downside, 2-3% plus, right? So be very careful this week. Even though it looks like the bulls are starting to power through, nobody knows how rate cuts will be received this week, guys. At best, people have a guesstimate, right? Their best guess. But if anybody tells you they know exactly what's going to happen after rate cuts, they are lying to you guys. At best, you can have a guess, but nobody knows with certainty. You can make arguments for either single side of the aisle right here. So please keep that in mind. In terms of the volatility events this week, well, we do have one on Tuesday, which is going to be retail sales. And that is very important because right now we are obviously monitoring the health of the consumer very closely. We know that the consumer has been relatively weak, and any extremely weak retail sales data could send our markets into a little bit of a tantrum before the rate cut event on the Wednesday session. And then, of course, Wednesday is going to be the big volatile event of the week, guys. So keep in mind, Tuesday and Wednesday, whatever action happens, it can also lead into the Thursday and Friday sessions, right? If we have bad days on Tuesday and Wednesday, there's no reason that it needs to stop there. It can pour into Thursday and Friday, and vice versa as well, right? If we have very good days on Tuesday and Wednesday, the bullishness could carry through on the Thursday or Friday session. The moral of the story here is that we need to be very careful in the plays that we choose to make over the course of this week. So that's why all the plays that I'll be presenting you guys are going to be relatively safe plays with decent margin of errors. So that being said, guys, before we jump into the top 5 options plays, let's go over a few of the strategy rules. Now you will see here, guys, these are all going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. If you do not know what selling puts is, just think of it as a buy limit order that pays you. Let's say you wanted to buy some Google stock down here at about 155. Well, there's 2 ways of doing that. Either you can set a buy limit order down here for 100 shares, but in the event the market doesn't pull back and fill you, you won't get the shares and the stock just may pull away from you and you literally get nothing. This is where we can implement a short put strategy, which also replicates a buy limit order on the stock. So take a look at the put option contracts right here for Google over the course of the week, and you will see at the $155 strike, they are paying about $87. So that means if we were to write the 155 put, we are agreeing to buy shares here, 100 shares specifically, in the event the stock closes below this on the Friday session. So it's basically like a buy limit order. However, it pays us. If we choose to write this option, we will collect all of the $87. Now, keep in mind, in the event the stock closes below 155, we'll have to buy 100 shares, but we do get compensated with $87. So it's a buy limit order that pays you. And in the event the stock closes above 155, we still get to keep all of the $87. So it's a very easy strategy to run, guys, whether you're a beginner, intermediate, or even advanced investor. And it's the strategy that I prefer running on the channel because it doesn't require a lot of time and the risk is relatively low as well. So now let's move into some of the strategy rules, shall we? So I'll be going over some of the strategy rules relatively quickly, guys. That being said, if you haven't seen my 30-minute video where I give a full breakdown of the strategy, how I choose my stocks, how I choose my strikes, and how I just run the strategy in a more detailed form, take a look. I will link that video in the top right corner of the video right now, and also down below in the description if you are interested. It's a 30-minute video where I do a breakdown of this strategy more in depth. As of right now, we're going to go through these rules relatively quickly. Now, in terms of the put wheel, what we want to do here, guys, is we want to, number one, be writing puts on a very solid company. It's rule number 1 for a reason, guys. Never write any puts on a stock you do not want to own at the designated strike price. You need to only be going with solid companies for you, high conviction stocks for you, because if ever you get assigned and start having a loss in the position, you won't be questioning yourself whether or not you're in a solid company. That can have some reversal to the upside and get us back out of that trade at a profit. So it's rule number 1 for a reason, guys. Please only do it on solid companies. Number 2, we want to be targeting companies that are in a monthly uptrend or a long-term range. This just improves our odds of not being assigned because we know that the bulls will be supporting us at large areas, right? Large areas of support. So that's why I say always look for companies in a monthly uptrend. Monthly uptrend is going to look something like this, right? Or a long-term range. Something like a long-term range can be the lower end of, let's say, a stock like Autodesk when it was trading back here. So very important rule number 2 as well. Number 3, the company needs not to have any earnings this week, guys. You've seen what's happened in the last 2-3 months of trading. Stocks that are only expected to move maybe 5-6% after their earnings end up moving 15-20% to the downside. So it's a very volatile event and it's extremely difficult to predict the direction of earnings. So if you want to be safe and minimize the volatility and minimize outsized losses, do not write any puts on stocks that have earnings this week. Number 4, we want to be targeting stocks that are in a big area of support or a breakout retest. Let me pull up the example for Autodesk once again. So a big area of support would be obviously this range down here. And a breakout retest trade, also a high probability trade, would be something like this. Top end of the range of resistance, we start breaking out of that range, retest the top end of the range, and run. Usually this retest area is a very high probability for entries on a stock. So all the options you'll see me take on the channel or either one of these two conditions. Now, these next 2 points go hand in hand. We want to be writing options at or lower than the expected move. If you guys don't know what the expected move of a stock is in a given week, you can always visit optionsai.com. They have a free expected move calculator. Now, the expected move is the Wall Street probabilities for a stock's movement up or down in a given week. Here you can see we have Google, and the expected move is about 2.6%. We want to be targeting below the bottom end of the expected move, guys, because usually what happens in the event a stock moves quickly below the expected move for the week on a Monday or Tuesday, usually the rest of the week we can get some mean reversion and the stock will pull back up within the bounds of the expected move. So if we can catch that move to the downside and be writing significantly below the expected move, it improves our odds of not being assigned. Now, the next point as well, writing on a red or flat day. Well, it stands to argue, guys, if it's a red day, we'll be moving down into this expected move. So it's going to offer us some strikes further and further and further below that expected move, once again, improving our odds of not being assigned. Now, the next point right here is our ROI. So we want to be writing between 0.5% and 0.75% in weekly premium. After running this strategy for the last 5-6 years, this is what I found to be the sweet spot. The sweet spot between making a decent amount of ROI on a weekly basis and also minimizing the probabilities of not being assigned. If you don't know what the 0.5% rule means, just go on the options chain right here. And what we're going to be looking for, guys, is 0.5% of our strike. A very quick way of doing it in your head for some mental math is just divide the strike price by 2, and you want to see that in cent increments right there. So let's take the 155, for example, divide 155 by 2. If you do it in your head, it's roughly 80 cents, right? Roughly 80 is half, 77.5. So it stands to argue we would want to see at least 80 cents on this bid right here. So this would be a very decent options play for the upcoming week. We want to be keeping it between 0.5% and 0.75%. Do not write options too close, guys. Anything above these percentages will increase your odds of being assigned and are just too close to the current share price. So do not get seduced by higher premium that is closer to the share price right now. It is a trap, right? So always try to keep it between 0.5% and 0.75% in weekly premium. If we're always writing 0.5% on the capital, guys, that should be giving us, 0.5% times 52 weeks per year should be giving us an ROI between 25 and about 30%, right? So the last one, taking profit at 90% of the contract value, guys. This is for 2 reasons. Number 1, because the strategy is very passive. You only need to write these options on a Monday or Tuesday and then let the time decay do the rest of the work throughout the week to get you all of that premium in your pocket. Now, since you probably won't be at your screen Monday, Thursday, Friday, 8 hours a day, you want to be setting a take profit order. So in the event the contracts lose a lot of their value very, very quickly, we want to be getting out of that trade because it frees up the capital for reason number 2. We can then use that capital and find another trade. So this is why this one is important as well. And now, in the event we get assigned, so in the event the stock closes below our strike price and we have to buy the shares, well, to be writing how we can get out of that position, guys, well, the short puts are to get us into the trade. It's a buy limit order. Now, the covered calls to get out of the trade is a sell limit order. So we want to be writing covered calls at about 0.5 to 1% in weekly premium, and we want to be writing those covered calls at the assigned strike price or 1 strike higher, right? The only time I'll be choosing to write 1 strike higher is in the event, let's say we get assigned on Google at 155 on the Friday session, and then on the Monday morning, it just gaps up like 2-3% higher. Then I might be tempted to write 1 strike price above where I got assigned, but that is the only criteria that will allow me to do that. Anything other than that, I am always writing at my assigned strike price. So hopefully that makes sense right there, guys. So with all that out of the way, now let's jump right into our top 5 options plays for the upcoming week. So number 1, guys, is going to be Google. Now, I've put a lot of emphasis on Google in the most recent weeks, guys, because it is the stock in the Magnificent 7 that has the cheapest valuation. The PEG ratio is only a 1.14. That is extremely cheap for such a high quality company like Google. And we're also coming into this big area of support down here, which is your previous all-time highs. So I really love these lower locations on Google. I think it's a tremendous buying opportunity for the company, right? That being said, how do we play this one with short puts? Well, glad you asked. I'll explain that right now. So the expected move for Google on the week is 154.27. Let us go see if we can find any premium below this expected move right now on the options chain. So as you can see, we already had it up The 155s right now are paying about 87 cents. However, that is above our expected move. So what we would likely need to see on Google Monday or Tuesday morning is a little bit of a pullback, right? If we can get a pullback down into maybe 156, a high maybe even 155s if Monday or Tuesday are really bad, then that's going to free up strikes even lower. I would be tempted to be looking at these two strikes this week, guys, 150-250 and the 150s. They are a lot closer to our large area of support down here, this big green box. So wait for a little bit of a drop on Google here, guys, just because there's going to be a lot of volatility this week. We don't want to jump the gun, right? If it runs away from us, no problem at all. Do not chase the market. But if it comes down into us, it's going to open up some trades once again at maybe the 150-25s or the 150. So that is the trade I'm looking for on Google myself this week. That is stock number one. Stock number two right now is going to be Square. So Square as well is one that I like just because of the valuation of the company. The stock is excessively cheap right now, trading at only a 0.41 peg for a stock with extremely good growth metrics. This is literally as cheap as you can possibly find a fast-growing tech company. And as you guys can see, it's been in a very beautiful long-range support area down here, roughly between the $63 and lower $52 range. So that's why I love playing Square down here. Now, the expected move for Square on the week is about 61.02. So let's go see if we can find any premium on Square below the 61.02 mark. Let's go have a look right here. So in terms of the options chain for Square, let's go have a brief little peek, shall we? And while we do that, give me a sec. Get some coffee. So looking at Square here, guys, can we find premium below 61? As you can see, the 61s give a lot of premium. This is almost 1%. So we can afford to be going even lower. Think the $60 strike or 59s. The ones I like myself for this week, 60 all the way down to roughly 58. So in the event Square has a little bit of a sell-off here on the Monday or Tuesday session down into maybe the low 63s, high 62s, that should free up maybe even the $59 and the $58 strike. These are going to be the ones that I'm interested in this week, guys. 58 up to about 60 bucks, just because it's in our big area of support. We want to be going as low as possible. Now, one of the conditions, guys, about this strategy is being able to adapt quickly to changing market conditions. That being said, if Square opens up minus 4% on a Monday session, right, and brings us right down into our expected move in one single day, are we still going to be writing the $60 strike super close? No, we want to be going as low as possible on this options chain. Think 57, think 56, as long as you can find your 0.5% rule. And for those numbers, you'd be looking for roughly 25 to about 30 cents for that trade to make sense for you. So hopefully that everything makes sense for Square on that one. That is stock number two. Now, stock number three, I actually have a trio of semiconductor names, whichever one you guys feel most comfortable in trading if you want to trade these. Obviously, we know semiconductors have been very volatile recently, but that volatility gives us an opportunity to be writing strikes a lot lower than the current market price right now. So stock number one for the semiconductor trio is going to be AMD. So we know AMD is coming up into this big area of resistance, and we also know that we have a good area of support established below us right then. So I want to be writing put options, guys, in this lower area of support as low as I can possibly find, closer hopefully to $137, $136 range. The expected move for AMD this week is 145.38, but as you can see, guys, that is not quite in our support range. So I want to be finding premium even lower. Think lower than 140. Let's go have a look. Can we find it, or do we need to wait for AMD to have a little bit of a dip first? So let's pull up some AMD options changed right now and have a look for the Friday session. So as you can see, we're targeting 140. At 140, we'll need about 70 cents. Do we get it? Not quite just yet. As you can see, our 0.5% rule is roughly respected, only starting at 142. Now, 142 is below the expected move, but it's still not in our area of support. I want to be very picky with the stocks that I'm choosing this week, especially with rate cuts and all the possible added volatility. So that being said, I'll be looking for a little bit of a price drop on AMD early in the week, right? If AMD comes down here, 149, 148, 147 to Monday or Tuesday morning, that could open up some strikes below the 140 mark. So the ones I'm really interested this week, guys, is 140 all the way down to 137. But keep in mind, we need to be finding at least 65, 70 cents of premium on those. So we need to, for AMD, to have a little bit of a drop early in the week. I'm not going to be chasing this one, guys. If it moves up, I'm not going to start writing puts higher and higher trying to chase this stock at all. We need to wait for it to come to us. Now, trade number 2 of the semiconductor trade will be, of course, NVIDIA. So NVIDIA right now is coming into our big area of resistance above us, 119 to 115. In the event Monday and Tuesday are bad for the markets and we start coming down, that may free up some premium, guys, where I want this stock. 106 to about $100 is where I'm willing to pick up 100 shares. That being said, the expected move for the week is 113.09. It's a little bit too close and far away from our area of support. So I do not want to be riding too close to 113. I want to be going for 107, 106, 105 if I can get that premium. So it stands to argue we need to wait for NVIDIA to come back into us, right? Let's have a first glance at the options chain and see how much of premium it's giving right now. So let's pull it up real quick. Let's pull up NVIDIA. And we're gonna go shopping for some NVIDIA put premiums, right? So taking a look right here in terms of the put premiums for NVIDIA, let me just move myself over so you guys can see best. So as we can see right now, where is the 0.5% rule, right? Well, 110 would be about 55 cents. If you guys don't believe me, right, just do it like this, right? 55 cents divided by 110, you can see that's literally 0.5%. So as I said, quick mental math way of doing it so you can go through a lot of these options chains quickly without a calculator, right? Just divide the strike price by 2 and you need to see those cent increments right there. So 110 is a little bit high for me right now, but as I said, if NVIDIA starts dropping a little bit, look for the 0.5% rule, guys. 107, 106, 105. Or even lower, right? If NVIDIA has a very bad day on Monday or Tuesday and comes down, you know, right away into 112, 111, 110, we've seen it before where NVIDIA can drop 4, 5, 6% in a day. That will free up the lower $100 strikes, guys. We want to be going as low as possible, as close as possible to this big box of support, 105 to 100. While still getting our 0.5% rule. So hopefully that makes sense on NVIDIA. And the third trade as part of our semiconductor trio this week is going to be ON Semiconductor. Look at this beautiful support range on ON, guys. This is pretty much $70 all the way down to $60. This 10-point range. We want to be getting as deep as possible into this large support zone, guys. It's been such good support for arguably the last 2.5 years in this market right now. So it is a very big one, which is why I love playing it. The expected move on ON this week is about $68.40. So let's go shopping on ON and see if we can find any premium here below that expected move of $67.40. So let's pull up the options chain right now together. So taking a look right there. Expected move, 68.40, excuse me. So can we find premium below that and still get 0.5%? Well, you can see right here, $67 strike is paying 34 cents. That is literally 0.5%. So that would respect our rule and it would be below the expected move and also towards the lower end of our strike zone. However, if ON Semiconductor drops with the rest of the market on a Monday or Tuesday session and comes down immediately, 70, 69, 68, are we still going to write the 67s? No, it'll be too close at that point, guys. At that point, you'll want to go for the 65, 64, 63. And I'll remind you, you'll need to see about 32, 33 cents for those strikes. So as I said, guys, right? One of the best things to do with this strategy is to adapt depending on the size of the moves down on the Monday or Tuesday session. We want to be going as deep as possible in the support location while still getting our 0.5% rule. So hopefully that makes sense for all of these semiconductor trades, guys. I'm going to be patient on these and not chase them at all. Let them come to us, guys, so we can get the best possible pricing. Now, trade number 4 is going to be a pair of banks. Just because the banks have been getting hit a little bit hard over the past 2 weeks, we want to take advantage of this renewed volatility in the financial sector. So as you can see, for the first one is going to be Bank of America. I've labeled the support zone down here. 37 down to about $36. Why is it an important zone? Well, it's the zone that we tested in early April, and it has been a big area of resistance for the markets back in 2022 and a large area of support prior to that in 2021. So you can see it is a fairly important level for the markets. And on the daily, the 200 daily moving average is right there as well. So for Bank of America, the expected move is 37.64. So let's have a look together. Can we find any premium below that 37.64 on BAC? Let's have a look, shall we? So on Bank of America, you can see the $37 strike doesn't have much premium at all. And even the 37.50s doesn't quite have our 0.5%. You would need to see roughly 19-20 cents right here for it to be worth it. So it's almost ready. If Bank of America has a negative day on a Monday or Tuesday session, pulling us down into the low 38s, maybe even high 37s, guys, that is going to free up maybe even some better strikes. Think 37, think maybe even 36.50s. So those are going to be the ones that I want to target this week. 37 to 36.50. Watch for the 0.5%, guys. About 18-19 cents on these bids if possible. So that's trade number 1 for financials. Trade number 2 for financials is going to be Wells Fargo for the exact same reason. Coming into a very large area of support, $51 all the way down to about 47 bucks. Resistance, right, for the markets. Once again, resistance for the markets. And if we pull this one back as well, you can see how many times this whole general area has held up for the market. So it's a very important zone to say the least. That being said, the expected move for Wells Fargo this week is $51.28, this yellow line right here. So we want to be finding lower than the expected move, of course. And keep in mind, if we come down a little bit, we could even be getting daily oversold conditions on the banks. And usually when we get daily oversold on the banks, we do tend to have a very nice recovery rally within the next 1 to 2 following weeks. So keeping that in mind, can we find any premium below $51 on Wells Fargo? Well, let's pull it up together, shall we? So moving into WFC, let's have a look together. So pulling up the options chain real quick. Sorry, guys, that I have to keep bringing up these pages, but it kind of is what it is at this point. So options chain, beautiful. So moving into the expected move, 51.28. So can we find below 51? Well, as you can see, 51 right here is paying almost 0.5%. You'd need to see about 25-26 cents on the bid for it to be worth it for you right there. So in the event Wells Fargo has a little bit of a decline Monday or Tuesday, let's say they come down lower 52s, that's probably going to open up even better strikes, guys. The 50s, maybe even the 49.50s. So I'll be one of these 3 strikes. It'll be one of these 3 strikes for me, guys. 51, 50, 49.5. As low as we can possibly go, depending on the size of the pullback on a Monday or Tuesday session. Now, if Monday and Tuesday open green, are we going to start chasing this market to the upside and write the 52s and the 53s? No, guys. At that point, we just let it run away and we look for another opportunity that is respecting our larger areas of support. The last thing we want to do is chase stocks to the upside in a week where we're getting rate cuts, guys, with all that volatility. So hopefully that makes sense for Wells Fargo. Now, the last trade I want to present to you guys is one of my favorite stocks in the entire market right now in terms of just how cheap the stock is, right? So take a look, it's going to be Airbnb. So Airbnb has been consolidating in this lower range for all intents and purposes since their earnings. It's been roughly over a month at this point that we've had very, very tight accumulation in this zone. So that's why I love playing this stock in the event we get a little bit of a downside momentum on Monday or Tuesday. We may be able to find some premium down here, 112 down to about 110, which is the start of our very, very large prior area of support. But that starts about 111 down to about 102. So I love playing options in this lower location on Airbnb. Couple that with the fact that we've been weekly oversold now for about 5 weeks in a row. So if we get one more dip in this location, I think that's probably going to be the end flush and then possibly mount a little bit of a rally on Airbnb because the company's fundamentals are really doing fantastic. So the expected move is 114.26. Can we find some premium below there? Let's go have a look on Airbnb together, shall we? So moving into Airbnb. So take a look right here, guys. At the 114 strike, we're getting about 55 cents. That is almost good enough, right? You need to see a roughly 57 cents for here to make sense, but I would agree in taking 55. That's not too bad. But we want to be waiting for a little bit of a dip, right? So in the event Airbnb has a dip Monday or Tuesday morning, if we come back 116, 115, well, then that's probably going to free up even lower strikes, guys. Think 113 all the way down to roughly 110. As low as we can get while still getting roughly 0.5%, which for all intents and purposes is going to be anywhere between 50 and 55 cents to stay a little bit conservative, right? So this is going to be the general area I'm targeting, 113, which is the lower end of this range right here, all the way down to the start of our big support zone. So if Airbnb drops significantly Monday or Tuesday, down 3-4% with the rest of the markets, then it's probably going to free up the 110s and 109s. So be adjustable with your targets depending on the size of the move, guys. So that's pretty much everything that I had for you guys this week. Hopefully you guys enjoyed that. And just be very careful once again here, guys. I've tried to give you the more safe plays, the ones that I think that have very good valuations, and the ones that I think that do also have very, very solid support areas, right? We don't want to chase stocks to the upside. We want to be looking for stocks pulling back into large support zones on high quality companies that have fundamental discounts right now in their share prices. So hopefully all of that makes sense, guys. If you enjoyed today's video, I would appreciate it if you dropped a like down below. Really helps me out for the growth of the channel. Second, if you haven't subscribed to the channel, consider doing so. We do these videos every single Sunday night, and then we also do our daily market recaps Monday through Friday after the close. So hope to see you back with us sometime soon. And lastly, guys, if you have any questions at all on the strategy, please feel free to leave them down below in the comments, and I'll be more than happy to answer you, usually within the first 24 hours. And lastly, guys, if you want to get all of my trades in real time, not only the short put wheel that we run on the channel as part of this strategy, but I also do a lot of a lot of directional options like call debit spreads or long calls or long puts or even share swing trades. If you want to get access to all of my trades, click the link on click the link to join the Discord down below. If you want to, you get access to all of my trades. We also do Monday through Friday live trading sessions in the morning from about 9:15 to 10:15 a.m. and go through all the possible trade setups as well. And you can ask me questions in the Discord all day and run plays by me if you want, shares, options, whatever you guys want. So if you're interested in that, the link is down below. Other than that, guys, have a great rest of your night, and I'll see you throughout the week in the Monday through Friday recap videos. Take care. Love you guys, and peace.